Good evening, everyone, and warm welcome to Business Live. Coming up, Ghana's bilateral creditors soon issue formal statement on deal reached to restructure their debts. Meanwhile, IMF is hopeful Ghana will finalize MOU with bilateral creditors.
As of now, there is no MOU with bilateral creditors, but we know that there have been intense discussions in recent weeks, and those are continuing, and we're very hopeful that there will be agreement with bilateral official creditors.
You're live in the Washington, D.C. for the latest updates. Also in this bulletin, Ghana's oil production is expected to rebound in 2024 with an anticipated increase of 50%, and we shall be discussing the prospects of this projection on the fortunes of the oil industry. Plus, CD depreciation having an impact on the already struggling poultry industry as cost of feed shoots up.
So our cost of production, the greater, about 70% comes from cost of feed. And because the inputs are very expensive, the other ingredients are being affected by the dollar rate.
Details of these and many others lined up for you. Please stay. Thanks so much for your company. I am Pius Kojobaka. For our very first story, the International Monetary Fund has indicated that it is hopeful Ghana will finalize a memorandum of understanding with bilateral creditors on debt restructuring. Ghana has secured a deal with these creditors with a formal statement expected soon. Responding to a question posed by Joy Business during the Africa Regional Report in Washington, D.C., Africa Department boss Abebe Selassie said they are aware of some significant progress being made on the deal.
As of now, there is no MOU with bilateral creditors, but we know that there have been intense discussions in recent weeks, and those are continuing, and we're very hopeful that there will be agreement with bilateral official creditors. To be clear, they have provided financing assurances, though, and that remains in effect, and so we're not envisaging that it will be an issue for our ability to conclude the next review and provide the disbursement that's pending. As we noted, we've reached staff level agreement, and that's by far the most important component for the review. With respect to commercial creditors, I think we are grateful that the government shared with us some of the terms that are under consideration. Staff has provided an input on whether these terms were consistent with program parameters, and the government has decided that they would not pursue this deal just yet. Again, I think we're very hopeful that there will be movement and that they can reach agreement consistent with the program parameters, helping lower Ghana's debt burden at the right level and avoiding, of course, people of Ghana having to make too much sacrifice.
And I would like to take you straight to Washington, D.C., where my colleague George is monitoring events for us there. Thanks so much, George. And George, I want you to help us with some clarity on this development. In one instance, the IMF is saying that there's no MOU now. In another situation, Abebe Selassie is saying progress has been made. And the last, of course, has to do with the financing assurance. Clarify that for us.
Pius, this negotiation is based, if you can hear me, Pius.
I can, George.
Yeah, this negotiation, actually, it's a long haul. So the IMF often doesn't wait for everything to be finalized before it goes ahead to do what it has to do. First, in January, there is that agreement in principle. In that discussion, when I asked him that question, that they are aware that significant progress has been made on this deal. And another critical thing that Pius provided was that they have gotten the financing assurance. So it means that that is what they needed to go to the board. It means that it is true that a statement could be coming out very soon on that MOU being signed. And if the financing assurances is anything to go by, then they will progress with what they have to do by putting together the staff report that they have to put together, and then go to their management, and then go to the board of the IMF for them to approve the completion of the second review that will lead to the release of some $360 million to Ghana.
All right, so I guess then it means that this then, gives Ghana the room to unlock the $360 million it's seeking from the IMF, right?
He was right on that one. And even though he started to clarify that as we speak right now, they have not gotten that MOU signed by the two parties, they have gotten that financing assurance. And that is what they will take to their management and their board, all other things being equal, somewhere in June this year, to unlock that $360 million. So it appears that if the words of Ibe Selassie, who is the African Department Director, is anything to go by, it appears that they are going to go ahead and take their report to the management and board for that $360 million to be released to Ghana after completing the second review at the staff level, Pius.
And what more can you tell us about discussions with the private and commercial creditors, George?
Well, again, from that comment, he gave us that, and Pius, you don't get that indication that there is a deadlock. They themselves, if you engage them off record, they are surprised as in how things are progressing. Even though the fund rejected the initial terms that government agreed with the private creditors, it appears that government has quickly gone back, trying to rework the terms, and they think that things are progressing very, very well. But that is not a critical ingredient for the second review. The second review is more about the bilateral deal. It looks like this thing about the Eurobond holders will come up maybe in the fourth review. But it looks like, Pius, engaging all the actors involved off record and on record, things are progressing very, very fast.
And I know you've also been engaged in the head of Ghana's mission in Washington, D.C., Stefan Rode. What has he been telling you?
Well, Stefan Rode has been talking about how this program has progressed really beyond the expectation, doing so well. And if government should stick to the program conditions, he can then confidently say that we have seen the West, and going forward, they think that growth is going to rebound strongly. They may be an average of 5%. Another thing that he sought to clarify also that all the numbers that were captured in their fiscal and economic outlook report were more of like based on old assessment rather than factor their current assessment. So it appears that they are quite bullish about the economy, Pius.
Grateful, George. You do monitor events for us and keep us updated in our subsequent bulletins. George, you are Joy Business Editor there. Now, let's also bring in economist Dr. Patrick Isumin. He is an associate professor, I should say, Patrick Isumin, who has joined us on this development. I know he's been following keenly in relation to this debt restructuring. Thanks so much, Associate Professor Isumin. Now, good to know some significant progress has been made in terms of Ghana reaching an agreement with its bilateral creditors. What are we currently awaiting now is the MOU to solidify this agreement. An impressive move so far.
Good evening to viewers. I'm not sure if I will classify this as an impressive move. I think once we had the framework agreed all the way back in January, I think it is expected that by now we would have made that much progress. So I think if we are that close to the MOU, then that's great. But until we put pen to paper, we cannot begin to celebrate it. I think we have to finalize all the agreement and put all the I's and cross the T's before we know we have arrived.
And for how long can we wait for us to have this MOU?
I think, when you hear the comments coming from both the IMF and the government side, you get a sense that we are very close, and that, probably, most likely in May, whenever there's an IMF board meeting, you get the sense that by then the MOU would have been signed and Ghana will be ready to submit the second SLA.
Then there's no time to jubilate yet until we get that official communication or MOU from both parties, right?
It's never time to jubilate as far as, as long as we are in this program. I think from the IMF point of view, we've made a lot of progress. And the indicators clearly, the macro indicators shows that we've made progress. But I think you and I will agree that, ordinary Ghanaians wouldn't feel that kind of progress. So, yes, but in terms of the program, and what the program wants to achieve and the indicators, yes, it's going to be good progress for the program, because then more release will come. Don't forget that in recent times, the cedi has become wobbly. It's become extremely weak after holding up rather well last year. Now it's beginning to show signs of trouble. So I think having all those agreements and having those additional releases will be very helpful.
Again, we heard Habibi Selassie expressing optimism about we making some significant progress. But how critical is it for us to get this $360 million to ensure the sustainability of the program?
I think when you read the statement issued by Stefan Rode when announcing the staff level agreement for the second review, it says that we need that MOU with the bilateral partners to submit the SLE to the IMF board. So it's clear, if we don't get that MOU signed, this is not going to the board for approval. And once we get that one, once we get the MOU signed, it will clearly go to the board and the board will approve it. So the funds will come in early. I think the other comment he made had to do with the bondholders, which, to be honest, I was quite surprised that even though the agreement was eventually rejected by the IMF, I was quite surprised that there was some modicum of agreement at this stage. But so I think that's for the longer term. That is for us to be able to conclude the debt restructuring, see where we are, how much savings we would have made. And don't forget, the government also needs to resume some of the infrastructure projects that have been suspended because of the debt operation. So I think all of those are going to be very helpful going forward.
Very well. Thank you very much, Associate Professor Patrick Esuming. We are grateful speaking to us here on Business Live. Let's shift focus to some other stories. Ghana's oil production is expected to rebound in 2024 with an anticipated increase of 5%. According to Fitch Solutions, this recovery is expected to be driven by Tullow Oil's extensive drilling campaign at Jubilee and 10 fields. Here's a report.
Fitch Solutions, however, said a temporary plateau is foreseen after this surge until Pecan starts production, which is not expected until 2027 at the earliest. It said oil production would remain bullish, but contingent on Pecan reaching final investment decision this year. Following operational setbacks in 2023 that led to a significant decline in production from the Jubilee and 10 fields, Fitch Solutions projected a rebound in oil production growth in 2024 with an anticipated increase of 5% to 177,120 barrels per day. If Pecan's final investment decision is confirmed by the end of 2024, Fitch Solutions foresees Ghana's oil production reaching its peak at 238,980 barrels per day in 2029. This projection is cautious considering the persistent historical delays in Pecan's final investment decision over the past 3 years. Whilst drilling will pause in 2024, it is slated to resume and conclude in 2025, suggesting continued investment in and development of Ghana's oil production capabilities. Fitch Solutions continued that the complications experienced in the Jubilee and 10 fields in 2023 were particularly damaging, with production in the first half of the year dropping significantly compared to the same period in 2022. It said issues such as flow assurance problems, reduced water injection and temporary halts in well operations were to blame. Although these issues have since been resolved, they led to estimated declines of 9.5% in crude and condensate production in 2023.
And I want us to elevate this conversation further because we've been joined by energy strategist, who is also the CEO of Eureka Energy, Dr. Yusuf Suleiman. Thanks so much, Dr. Yusuf Suleiman, and good to see you. Now, this is the projection Fitch is making about Ghana's oil production, saying about 5%. Is that really achievable, looking at the global uncertainties?
Yeah, so thank you very much, and good evening to you, Pius, and to your cherished viewers. Indeed, if you look at these projections that are made by Fitch Solutions, they were not made in a vacuum. They clearly stated Tullow program lineup, and they are resolved to continue to be in Ghana for the foreseeable future. And if you look at the program that Tullow they put in place, I will consider it as comprehensive and robust, and to the extent that, I mean, Tullow has a plan to be able to invest in Ghana for the next decade and beyond, depending on how things turn out. And do they have another opportunity or alternative? I think Ghana has been Tullow cash cow in a way, because most of the fields that they have in other areas, they've not performed like, what Ghana is giving out. And so I always see Tullow and Ghana as a win-win situation, because without Tullow, I can tell you on authority that Pius, our upstream will not be there. Because we have 3 fields, and out of the 3 fields, 10 and Jubilee is being championed by Tullow. And so with the investment program that they put in place, and then the consistent drilling that they've embarked upon, if you notice somewhere they had to stop drilling. It's not that they're not going to drill again. They had a plan. They've reached that plan. So they just want to rest a bit, plan ahead, and then come back. So we're hoping that they will come back strongly. So with that drilling that they have done, if the wells, both water injectors and producers that they've drilled, if they've all lived up to expectation with respect to their production targets, I think that projection it holds some credibility. However, see that projection able to hold plateau, then after ramping up our production. What ramp up our production will actually be getting a new field coming into the scene, Pius.
And with that said, as we speak, the geopolitical tension is intensifying by the day. Israel and Gaza, and of course, quite recently, the missile attack on Iran by Israel, pushing oil prices up, and Brent crude on the international market, we are learning, has risen over $90 per barrel. How would these developments have an impact on our oil production?
Yeah, so it's both ways. Of course, if those kind of geopolitical tensions, when they happen, they do have bullish trajectory, but they have an extent for which the bullish trajectory could tend to bearish, Pius. Because if you look at what is happening, if actually the war elongates and it escalates to the extent that we have this Strait of Hormuz being impacted, and remember that controls about 20% of global oil supply on daily basis. That's about 20 million that we're talking about. So if that is impacted, oil prices are going to skyrocket to level that we haven't seen. However, we hope that because it's not in anybody's interest, we hope that cool heads will actually prevail. So the positive thing is that oil prices will go up. Of course, every exporter of oil will gain a lot of revenue, but that also border a lot of hardship for consumers, oil consumers as well, like people in Ghana, of course, in other countries who are highly reliant on consumption or importation of these petroleum products or finished petroleum product. That would be a double-edged sword. For the upstream, yes, it's a good thing. But if you turn to the downstream side, if oil prices are high, your guesses are as good as mine. And especially if you look at what is happening now with oil prices going up, they're still not performing well. The pump prices are nowhere near. And if the premium of this war is to come to settle on the market, I think it's going to be very, very difficult. But we are hoping that, they'll be able to resolve it as soon as possible and contain it. Because for now, the escalation is there and the potential for massive spillover is right. And the players know very well. So I'm very certain and I'm hoping, Pius, that the powers that are holding this war, those backing Israel and those also backing Iran on one hand, will be able to talk to these warring factions to quiet. Die down, and then let's contain what is happening in Gaza, and then we can come back to normalcy.
And quickly, Dr. Yusuf Suleiman, what more can Ghana do to harness its oil production prospects despite these geopolitical tensions, especially when it comes to the downstream sector?
Yeah, so for the upstream and downstream, let's say for oil production, that's when we come to upstream. I think we need to be able to wrap up our investment. I always believe that well hydrocarbon has come to stay. It will stay with us for foreseeable future, regardless of the upset in renewables. If you look at the amount of investment that is actually going to oil and gas now, it's massive. Because renewable, they had opportunity somewhere 2021, 2022 after COVID, and the kind of trillions of dollars that were poured into, unfortunately, it didn't pay back the way investors wanted it to be. So a lot of them began diversifying back to oil and gas. So yes, I don't think our players, and this goes to TALU and then ENI, they don't have any excuse not to invest. They should invest and invest profitable. And then secondly, also with respect to our government and then TALU, and then the players, we have to ensure that we create an enabling environment for that investment to be done, especially the FID. Right. There's no circumstance we delay these FIDs. That delays oil productions also. So in the upstream, that's what we can do. But the downstream, there's a lot we can do in the downstream. Especially, we will need a refinery, of course, to have a buffer to be able to help us in when these geopolitical tensions crop up.
Thank you very much, Dr. Yusuf Suleiman, who is also the Chief Executive of Miracle Energy. Thanks so much for speaking to us. You're still watching Business Live. Time for a breather. Hello, welcome back to Business Live. Some poultry farmers are lamenting the high cost of production is due to the cedi depreciation. According to them, the loss in value of the local currency has attributed or contributed to the increased prices of feed. The national president of the Women in Poultry Value Chain, Dr. Victoria Nogbe, spoke to Joy Business at the sidelines of a forum organized by the Economic and Trade Mission of Israel to Ghana to optimize Ghana's poultry value chain through partnerships.
Ghana's poultry sector contributes about 14% of the country's agricultural GDP. The sector supplies 57,671 metric tons of poultry meat, leaving a shortfall in demand of 162,129 metric tons. Over the years, the Israeli embassy to Ghana, through the Economic and Trade Mission of Israel, have taken steps to develop partnerships and share technical knowledge to improve the local industry. Dr. Victoria Nogbe, the national president of the Women in Poultry Value Chain, highlights the depreciating cedi as one of the many challenges hampering the growth of the poultry value chain in Ghana.
I think the feed sector is where critical attention should be paid because our cost of production, the greater, about 70% comes from cost of feed. And because the inputs are very expensive, the other ingredients are being affected by the dollar rate because they are being imported. It makes our feed so expensive. And for that matter, our products become very uncompetitive if we compare it to the imported products in the country. So attention should be paid to the feed value chain at that spot. And then after that, when it is produced, how do you sell it? Sometimes you get the feed you produce, but the processing and the packaging and the marketing is a problem. So there's a need to pay attention to those key areas, even though all the other areas are necessary because it's a chain. If you don't get the chicks, you cannot move on.
Yaniv Tessel, the head of Economic and Trade Mission to Ghana, believes the right partnerships could support the expansion of the country's poultry sector.
I think in Ghana there are many farmers. I think one of the things the Israeli company can help with is help scaling up, not only by size, but only in the level and the productivity. I think one thing that we're good at Israel is productivity. We know how to grow more or make more with less inputs. So I think this is something we can affect. If we can provide better feed, better vaccines, if we transfer know-how, how to develop and build turnkey projects here in Ghana, I think we can support in scaling up the industry.
The forum was dubbed optimizing Ghana's poultry value chain by exploring Israeli poultry solutions. Yaniv shares the objectives of the forum.
The objective is bring together Ghanaian stakeholders, Ghanaian farmers, and Israeli technology providers. So what do we want? We want to create a dialogue. We want to plant the seeds to form partnerships. We want the guests here today will start business conversations on possible models of collaborating here in Ghana, either buying the technologies or doing joint investments through joint ventures.
Thanks so much for watching Business Life with me, Pius Kojo Baka. For more stories, do log on to myjoyonline.com/business. Great stories there. Development Bank Ghana targets 1 billion cedis funding for commercial banks in 2024. Fitch Solutions projects 19% average inflation for Ghana in 2024. Great stories on that portal as well for you. Do visit that portal and get yourselves updated. Great for serving you. Let's connect same time next week. I am Pius Kojo Baka.